Hello, everyone. Welcome to Stock Talk Thursday. It is June 16th. I'm here with you. My name is David Verbruggen. Got some very fun stuff to look at the market today. If you were with us last week, you remember how we were just kind of stuck between the exponential moving averages. Let's pull up the chart real quick. Here we were last week. There we go. We were just stuck between, we had the 10 and the 20 down on the bottom, and we had the 50 on the top, and we just went sideways. Like 8 straight days sideways. And finally on Thursday of last week, not long after we did Stock Talk Thursday last week, the market finally showed what it wanted to do. And as we kind of anticipated, we figured it would be a breakout towards the downside. Friday, big gap down, big move down over the weekend. That's a pretty massive gap down right there. I mean, that's got 3,900 opens up there at 38.40 or so. I mean, 60-point gap and then even more of a move down. So pretty crazy. Couple days of a little bit of rest. Yesterday we had the Fed announcement, and they did raise the interest rates again. Of course, the market doesn't like that. So yesterday was pretty volatile. Today, a gap down again and a move down again. So we're already down, about 60 points or so today, and we still got 3 hours of market time left. So who knows how much we'll be down. But if you guys remember, 20% down from the highs, that's when economists start calling it a bear market officially. And that point was right around 38.50 or so. We almost tagged it on this day right here, and then we moved up away from it. We did get below it on this day, but then closed above that. But this week, Monday was the first time that we closed below that 38.55 line. I think it technically was, and we've been below that ever since here. We could actually throw a quick line on there. You could say there it was right about there. That's the line. So below that, we're in bear market territory. And that's where we are. We're heading down further. So it's looking more and more probable that we are heading towards, potentially another recession. Don't want to create fear out there, but, there's also ways to mitigate that risk and not be afraid if you know what to do. But that's the overall market. So then a question is, okay, well, how far is it going to go? What are we looking at? Let's look at a 3-year weekly chart, and the first or the next level that looks pretty obvious to me is this level right around 3,500. You can see back here that was resistance in late 2020, so that right there, and so about 3,500 is where I would expect the market to go to, and then it might bounce up a little bit and then keep coming down. But if we are in for a full-on recession, there's nothing that says we can't drop 50% or so from the highs. At that point, our highs were 4,800. We could be down at 2,400, 2,300. Even that would be COVID lows right there, about the 2,300, 2,200 range. So that's not out of the realm of possibilities. Now, it'll take us a while to get there. It's not like we're going to be there by next week or anything like that. But that's just to give you an overall view of what's happening in the market. Again, from just a somewhat of a zoomed out perspective as well. You got a high, you got a low, a lower high, lower low, lower high, and now we've made a lower low again. So there you go. There you have it. All right, guys, we're going to go through what was hot and not last week and what is hot and not this week. Feel free to throw your comments and questions in. Keeping an eye on those. So love for this to be interactive. Let's take a look at what was hot last week. We had Alibaba, the Chinese company, kind of like their version of Amazon. They were the hot ones because they had moved up from about $80 or so all the way to about 120. Have cooled off some, but the overall market did come down quite a bit as well. So that would pull other stocks down with it. Did bounce up. It made a higher low and moved up for a couple days. Today, the market's down again, pulling it down. I'm not ready to go ahead and say that this isn't hot. it's not coming down as much here in the last week or so as the overall market has. We'll have to see how it can react to, the selling pressure that's happening today. But if it can start pushing up and just make higher highs and higher lows, then that would be hot. But this could also just fail as well. So that was last week. Looking at Target now, that was our not hot stock. And if you remember, there was really bad earnings that caused this massive gap down. And Target blew through this line. Curious now, I don't actually remember what that line was for. There you go. Was resistance back there in late 2020. Showed to be some support as well. It caught this drop here temporarily, but now you can see that it's moved through that. Just getting pushed down by the 5 EMA right now. So that's definitely not hot. All right, let's take a look and see what is hot this week. And we've got Fedex. So let's explain this one here. You can see that this was Monday, I believe. Yep, that Monday right there. Stock was down quite a bit, down nearly at 200. And Tuesday, it gapped up quite a bit and moved up a lot. That was a pretty big move up. And it's kind of curious because why did Fedex out of nowhere just shoot up? I mean, FedEx is not immune to the inflation issues going on. In fact, they're going to feel it even more. The high gas prices, they're going to feel that as they're delivering packages all over the place and as they're flying planes all over the place. The high labor costs, they're going to feel that as well. They pay their employees pretty well from what I hear. So it's they're not immune to any of those issues. Why was it that FedEx jumped up so much? That was a 14.4% increase in one day. That's pretty big. That's pretty big, especially when the overall market was tanking. Okay, this was Tuesday right here. What did the overall market do? Let's go back. Thursday, Friday. This was Monday. So Tuesday, the market was down a little bit after having been down significantly for 3 days. FedEx skyrocketed up. So what's going on with that? Well, what happened was, you can see on my chart here, I've got the E for earnings. There's also D there for dividends. Okay. And the last time they had dividends, they paid out 75 cents per share. The next dividends is going to be $1.15 per share. So that was a very happy surprise. People weren't expecting that good of a dividends offering. So that is why the stock has jumped up. So it made me think, well, you could buy FedEx right now. It's still time. I mean, there's still time. You could get in right now and still be a part of the dividends. The only issue with that, though, is look, you got earnings right before. Generally, and I'm not even saying this is a good buy point, because it's not, unless you were very aggressive off that 5 EMA bounce. But let's pretend it was at a good buy point. You're like, hey, I want to take advantage of this and cash in some of the dividends as well. Well, you've got that earnings report right before, so that's going to make it a little bit challenging, because that can go either way. And we've seen that before. That would just look at the last one we looked at, Target. There was that massive drop at earnings. So you never know. You never know, right? But that is our hot stock here, FedEx. Let's look at a couple other lines here. Let's pull out. Whoops, I'm looking at the wrong thing here. That's not what I wanted to do. I apologize. Oh, that's the other thing I wanted to share. Look at this. Here's another reason why this is hot. We just talked about the overall market this year being down 20% or more, and looking to go down more. And now we're looking at a 6-month chart, and FedEx is down some, but not 20%. And in fact, since February, it's just kind of been sideways. Last time it was right at this price level, or moving back here, we're looking at mid-February instead of the same price level it is now. It's just been moving sideways. So when you got a stock that can move sideways when the overall market's down 20%, that's pretty hot. I'll take break even any day when the overall market's down 20 or more percent. So Fedex, that's your hot stock for the week. Let's check out our not hot stock. This will kind of be an interesting one, and we're going to have Tesla today. So Tesla's a hard one for me to think of as a not hot stock because in my early trading days, Tesla was one that just took off. I mean, I remember when I was joining my first step 1 class, Tesla was like $200 a share or something like that. About 4 months later, Tesla was $1,200 a share. It was ridiculous. I mean, it just went. And so I always think of Tesla as being this highly volatile, crazy bullish, like unrealistically bullish stock. Like pretty much the only thing that would top it would be GameStop for that 1 week. But Tesla, let's look at this thing. Let's look at a 1-year chart. It's high in November last year, so 7 months ago or so, right around 1240, and now we're down to 640, almost half. Okay, so what's going on with Tesla? Why has it been decreasing so much? That's very curious as well, considering the high gas prices. You think the high gas prices would push people towards electric vehicles? They make a good vehicle. Obviously, people keep buying them. The stock went crazy. Look at this. This wasn't even the 2019, early 2020 run I was talking about. This is just late last year right here. That's a massive increase. That's kind of what you expect almost. But then the last bit, it's just been down. Now, I know very recently here in the news, and that this downward move isn't because of this last news item, but very recently here in the news, you've probably read that Tesla's cutting about 10% of its workforce, almost as a preparation for the incoming potential recession that we're looking at, because they want to continue to be profitable. And even though this thing's been down, they have been profitable. Look at this. Earnings per share, $1.02, $1.44, $2.05, $2.86. Tesla is a growth stock. Fundamentals are green. It has been down lately here, but there's still a lot of things that are looking up. But we can't ignore the fact that since late November, it's down about 50%. Even in just the last 2 months. About the last 2 months, it's been down 45%. That's a pretty big deal. All right, now let's look at let's put a couple lines on here. Let's look at this $630 level, right about. We'll do it on the 1-year chart. We're catching these lows here on the left side of the screen, and we're going to pull that all the way over. So this is a fairly significant support line with support right there. It caught this fall, bounced it up a good bit. So support right there, but it didn't move up much before it started to come back down again. And now we're looking to test that support line again, potentially even today. So if that support line fails, where could we be heading? Where could Tesla be heading? The next line that I would see potentially be these bottoms right here, about 550 or so. 570, somewhere in that range. So that would kind of be the next area of support that we'd be looking at if we broke that. And that's kind of how we look at some of these bear markets. When things are kind of coming down, the question is, where is it likely going to go? Where are we potentially going to see the next bounce? Sometimes that's a little bit harder to do in bullish markets, because sometimes when you keep pushing all-time highs, there's no previous data to look at. But when we're coming down in a bear market, we're usually not looking at all-time lows. And so we usually have some former support and resistance lines to look at and to guesstimate where do we think the stock's going to, do a little bit of a bounce. And if we're trading to the bearish side, that can be very helpful for us. So that's Tesla for us. That is our not hot stock. We'll bring it back to the overall chart here. There we go. Want to let you guys know about Workshop 2. That is happening this weekend. I remember last week, I couldn't remember if it was last weekend or this weekend, but it will happen actually tomorrow and Saturday. Workshop 2 is going to be offered. If you want to be a part of that, email events@tradeway.com. We can get you information for that. It'll be a great opportunity to just gain more wisdom in your trading, learn more about putting together a trading plan, and learn some new strategies, even like the Iron Condor, one of my favorites. It's a fantastic strategy. So events@tradeway.com. Go ahead and check that out. That's going to do it for Stock Talk Thursday today. Someone else will be on with you next week, and I'll be rejoining you guys again in 2 weeks. All right, we'll talk to you guys later.